Malandrino, Global Markets Reporter at Nasdaq. Joining me is Phil Mackintosh, Chief Economist at Nasdaq, to discuss an increase in COVID-19 cases and deaths, stalled stimulus deal, and disappointing jobs data, all weighing on stocks this morning. And Phil, it's kind of the perfect storm for market disappointment.
Well, I guess we've been waiting days for some bad news that could have all come in together, and we've been talking for a while about the fact that Europe has been seeing an increase in cases. But what's really interesting is to look at the rate of cases per million, because that puts Europe and America on a much more even footing, and it puts all the smaller countries more equal with the bigger countries. And what we're seeing is actually Europe has more cases per head now than the US. So all that we've been talking about, how people in America without masks and really not social distancing very well, has definitely kept our cases elevated versus Europe. But since Europeans all got back from their vacations, they have seen a significant uptick in cases, and they're actually pretty close to the same as what we are seeing on a daily basis per head.
Are we seeing any improvement with death rates by any chance?
Yeah, I mean, we've sort of seen in Europe, rates have not picked up anywhere near the rates that we had back in March, April. And that's been the case with the US and with Europe, but we are seeing them start to increase now. And what else seems to be happening is the new cases in Europe are trending older. So a lot of the more susceptible, more at-risk people are catching COVID. Even in America right now, the hospitalization rate is back increasing. So there's more people coming into hospitals than are leaving hospitals with COVID. So globally, there's a lot to worry about as winter comes into the Northern Hemisphere. We know from experience that if COVID picks up and a lot of hospitals, the fear factor picks up, spending changes, spending goes down for a lot of activities, and that's where the economy gets hit.
All right, and of course, we have to address the election with less than 3 weeks to go. What is history showing you in terms of if markets are stalling, if they pick up after an election day is over? And of course, we don't know what the transition of power is going to look like either.
Yeah, I mean, arguably, markets don't show us a lot. When you look at the different, 15 different elections in this chart, the lines are going all over the place. There's an average that runs somewhere through the middle, but I guess one thing that's pretty consistent is a quarter before the election, most of the markets were below the levels on election day, and at the quarter after that, most of the markets are actually up, although not all of them. But you can see the red line, which is the average, does seem to stall around about now with sort of a month or two to go before the election, and tends to increase afterwards. But looking at all the different lines there, I mean, there is so many what we call idiosyncratic or case-specific risks out there. This year, we've got the vaccine, we've got stimulus or not stimulus, as you mentioned. We've got the election itself, which is much less certain, I guess, in a lot of senses in terms of how long it might take to resolve. And the volatility markets are pricing that in. And then longer term, we've got about the debt that we're incurring and whether this unemployment is going to be more permanent, even if we get a vaccine. So there's a whole lot of drivers this time around that we haven't seen before. So it's a little bit difficult to draw too many parallels from that red line that looks like a nice, easy buying opportunity.
All right, Phil, thanks for joining us on Trade Talks.
You're welcome, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.